Ira Epstein of Linn and Associates with your metals market wrap-up for this Tuesday, November 19th, 2019. Well, it was a day spent if you were watching the impeachment inquiry. That's been going on literally all day. I think we have 2 more days of it right in front of us on Wednesday and Thursday. The president, of course, did one of his news conferences. We're looking still at problems between the U.S. and China in the trade deal. From everything I'm reading, and remember, I'm not privy like anyone else is into that room, it does sound as though China's making a demand that the U.S. pull back the tariffs that it put on since the May collapse of the trade talks, and then set up a formula to remove the other tariffs that we're on to get to a phase 2. I certainly don't know everything about it, but I'm sure there's a middle ground in there the president and his team will find. They're never going to let go of pulling off all the tariffs without getting to the phase 2, because this deal didn't begin over agriculture. This problem in the trade began off of forced technology, subsidies, stealing of technology. It's a bigger game. And what we did is, unfortunately, the farmer became the problem. And as you know, the farmer's never really been made whole by it. It's problematic, and we'll see where it goes. The metal markets were reacting to that in a very mixed way. One part of it you look at and you say, okay, why is copper up if the deal's not going well? That's the first thing I look at. I then look at the bonds and notes. They both had a reasonable rally. That tells me the deal's probably not going as great. And then I'm looking at the silver, the gold market, both of them, and the dollar. I think it's a mixed bag. And I think that's what we're going to deal with until this thing comes to a head one way or the other. And we don't know what's going on behind the scenes. So we wake up, and one day we'll wake up to a yes or a no. And I have no idea what that number is. Even the stock market, if you look behind me, the indices, you've got the Dow and the S&P down, and you had the Russell and the NASDAQ up. Retailing got hit today pretty good if you were looking at the numbers, coal and other companies. If you look at the weekly gold chart, we're in a bounce, that's all. Remember I was saying we were in a correction from this 15.25 area? Well, we've begun a bounce from the 1462.90, where I see resistance potential around that 1490.40, the 18-week. The problem for the market is if you take out 1462.90, you got to be careful. You could nosedive again. When I come to the chart action, you had an outside day up on Monday, and you followed through with a higher high today. That means the swing line is going to have a pattern of higher lows and higher highs. So the market ended formally a downtrend phase. It did that actually, as you can see, yesterday, and it confirmed it today by keeping the market up and not taking out yesterday's low. If you were to go from here and nosedive under 1456.60, you get what I call one of those ugly chart patterns again. I wouldn't even know where to put the swing line, and that's not uncommon. You get that from time to time, and I wait and let the system tell me what to do. Where's resistance? Well, if you put the moving averages on, you see the combination from 1483 to 1486.90 in the D contract. So that is where I'm looking for that resistance level to come in. If I look at the Bollinger Bands, we had gotten under them, we moved sideways, and now we're getting a little bit of an upthrust to them, and momentum has worked out of an oversold condition. So we're in the middle of sort of nowhere. The swing line is up, the bias is down, and momentum is trying to point up. Wow. It's one of these time frames where the market acts like a rally that may not have all that potential. You just don't know what the potential is. When you look at the daily bar chart of GLD, it's the same pattern. Higher lows, higher highs. The resistance, pretty similar to that of the futures, the combination of the 100-day average and the 18. And because you're under the 18-day average, the bias is down. You can see momentum pointing up, and the swing line is up. When we come over, we'll stay here with the GDX juniors. They today threw out buy signals. Why? Well, I can't show it. I can do the GDX, so let me start with that. GDX is not the same looking chart as the juniors. Here you've gone in one of these vertical price runs straight on up, and I would assume that the first resistance point is the 100-day average at 27.68. You've stalled out for basically 4 days now against that 18-day average, but unlike the juniors, The juniors at least pulled back yesterday, so now you've got a pattern of higher lows, higher highs. It's a prettier chart. And that means that what the pros don't want to see is taking out the 3708 level, because that would break the pattern of higher highs, higher lows. The market did stall for basically 2.5, 3 days right here at that 18-day average. Today lifting up. Next resistance point, 38.33, the 100-day average. And of course, if it really caught on fire, the upper Bollinger Band's a possibility. The gold-silver ratio is favoring metals. Generally, when that ratio pulls back, it means that metals as a group are getting a little bit of a bid. Is it every day like that? It is not. And all you did is you've come from 87 back to 86. Certainly not a big move. You're still not under the 18-day average of closes on the close-only chart. I'm just saying it's pulling back. When I look at this part of the market, you lost the embedded reading. You lost it yesterday. Watch right here. That's 2188. You had an embedded reading before that. When you lose that, often, I'm not going to use the word always because I've not seen it always happen. Often's a strong statement from me. Often, price and the closest of the key moving averages, in this case the 100, try to meet with each other. That's what I think is going on right now. Now, if you can clear that, then the 18-day average is the next number. No, I don't see any reversal so far to the upside in those markets. Here's a market I haven't the slightest idea what's going on. Here's an outside day down yesterday in copper. My rule when you have an outside day is that if it's down and you take out that high, the closest moving average, just like I said in the silver, is the objective. You took it out. The closest average is the 18-day. What are you, 15 points away from it? So, and are you trending now? You're out of a trend. So the market's gone from literally the upper Bollinger Band to the lower band and just whipping traders back and forth between there now. In the platinum, all you've done is you went from the upper band to the lower, stalled against the 100-day average. If you can clear that, the 18 becomes your next resistance point. From there, now the key is, can you clear that? Because if you went straight up, you're still not in an uptrend, because you'd have a pattern, even if you took this high out of 943.10, of a lower low, higher high. You need more work here. You're in a resistance zone in the platinum. In the palladium market, after the washout, the market is now going back to neutral territory. The 18-day average, yes, the swing line is up, yes, the bias is up, and yes, the market closed over the 18-day average. So the trend is formally back to the upside. Clearing this area, that's going to be difficult, but let's see if the market tries to even do it. We'll see where we go from there. Dollar index, notice how it stalled out between the 100-day and the 18-day average. Are we trending? No. What you've got now is a pattern of a higher high. You can see that right there, a lower low. You can set up a downtrend if you take out Monday's low right here of 97.55, stay under that 100-day average. That could put into play the lower band. The whipsaw market is right through here, so be a little cautious with that. I spent time today doing my first grain report of the year. And I know it sounds crazy because here I am at November, but I said I'd get some more videos done in other markets for you. And I thought that corn should be the market that I focus on right now. So I did price counts with it. I did the seasonal charts to give you an idea of the key numbers, and there's key numbers right in front of this market. I talk about the fact that there's a lot of corn in key areas still out in the field, and that if the farmers don't get it, you can lose up to 3 million acres of corn, so you've got to pay attention to that. I'll cover other markets, and I do talk about the oil and the meal. I give you a little bit of what's going on in there. So if you'd like to look at the report, just go to our website, www.iraepstein.com. Under Research, you'll see a special report, Grains. Just click on it. You can also get there by clicking on this icon. If you're watching me on YouTube, it'll take you right to it. It's a video report, so I hope you enjoy it. Take care.